Welcome to the Market Alert for Thursday, the 10th of December 2015. Starting off in yesterday's chart, we don't see any signals, and the reason for that is that we had a lot of volatility, which we didn't expect unless there was a geopolitical reason. There seems to be some unraveling in the markets that took place yesterday when there was no economic news to actually hold it back. So we had the US dollar moving sharply lower. I'll just show you this in MT4. This is last week when Draghi spoke and got it all wrong, and that's the effect that it had on the dollar there. That's the US dollar, and the market moving back. And then yesterday we saw the market slide once again, and this is the reason for yesterday's volatility. And as Zero Edge pointed out as well, not only have we got the Draghi effect from last week in the background, but the Chinese devalued the yuan, probably the lowest since 2011. You can see that, and of course all of this came to a head inside of yesterday's trading. Now the range of these bars exploded. They moved beyond what we normally have as a range of 8 to 25, but if we change this to 30 and then click apply, you will see the signals appear on the chart there. So the range was just outside of what we would normally use, 30 points, 5 pips wider in range, and then we see the market moving higher, and then of course this wonderful signal there at the top, which wasn't shown, and again couldn't have been forecast with regards to what was going on in the background. Although one thing it has shown me is that if we don't have any news now, the mere pressure of the debt and the bond market in the background there, it seems to be an excuse to bring the market down. The fact that the dollar is dropping is very good news for Yellen as well, because had the US dollar stayed on the highs, if we just go back to this, the market has stayed on these highs. If we can make this a bigger chart, there we go, then it would have seen the market break above the high from March, and the high that we've got last month in November as well. The market would have turned around. Now she's got the US dollar can actually move higher when she does, or if she does, increase interest rates, because when you increase interest rates, it's a positive thing for your own currency, but it's not a good thing in the sense that when you come to export, etc., it becomes very expensive. So I wouldn't be at all surprised if there's some manipulation going on. There's some excuses to bring the value of the US dollar down so that it will accommodate an increase in interest rates. And if anybody thinks manipulation isn't possible in the market, just type in LIBOR fraud, Forex fraud, gold fraud, and any other commodity sector, financial sector. Just type it in and see what you actually get. And you won't get any conspiracy theory. You will actually get reports from the FT of traders having been taken to court, etc. Unfortunately, it's not all of the bankers, but that's another story. So this is the reason for yesterday. And then just going back to the chart, I say the range wasn't wide enough just to pick this up. We've gone from zero volatility on Tuesday, yesterday, to explosive volatility, and then once this was out of the way, you can see the evening session just stuck in a sideways range, which is what we've seen all week. But that first few hours yesterday saw this level of activity. So prices moved higher in the hope that nobody would see anything, no economic data to spoil the party, and then the US dollar went on a bit of a sell, and it sold off there. In the daily chart, you can see this here. You got this wild session yesterday as well, market sideways. Just going back to the settings, what do we do at this point? Do we increase the settings? Well, I'd keep them set at the default, and unless you get the similar picture today, then you may want to increase them. But at the moment, I keep them at the default setting, because yesterday evening the market just calmed down, and if we just jump back again, you can see the market's been fairly quiet. There's no major selling or buying going on at the moment. After last night, the market's just hugging the 17,500 level there. So at the moment, I wouldn't say there was any reason to actually change the settings to 30, because the clue really is that the pre-market and overnight session, you get a lot of movement to anywhere between 100 150 point range, and we're not getting that. That's the clue to say start moving the settings. So news-wise, we should have quite a bit today. Official bank rate from the UK and all sorts of other stuff. But the US 130, we've got unemployment, import prices, Bubba's speaking at 6 p.m. and then Carney's being wheeled out to speak at 6:30 p.m. as well, just after the market goes through the quiet period, which shouldn't be too much of an issue for the US. Hopefully we'll get all of the activity in the first couple of hours like we did yesterday, but the opportunity to actually take advantage of it. Okay, that's takes care of that. Let's have a quick look at the implied volatility. Implied 1659, up sharply as you'd expect after yesterday's 300 points up, 300 down, back to where it started, and again that's reflected in the chart. So the volatility is picking up a bit now. We should be warned that we may need to alter the settings, certainly as we go into next week. We're only 6 days now away from the biggest decision of the year for the Federal Reserve on whether they're going to increase interest rates or not. So we're certainly on the countdown there. Right, that's it from me. I will see you in tomorrow's edition. Any other news I will report in as and when. Thanks for watching. See you in the next one.